Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of AMC Entertainment, ticker symbol AMC. And here I am recording this on Friday, May 31st, after the market has closed, and AMC closed at a price of $4.33, being up 2.36% on the day, and then going down a little bit in the after hours, currently trading right around $4.27. And so I think that there are a number of things going on that, in all honesty, I'm really, really excited about. Over the past couple of weeks, I have talked about how I did think that AMC could be coming down to right around $4.20 a share, corresponding with a test of this purple downtrend as support. And we have basically gotten down to that level. During market hours today, we hit a low of $4.10, but during pre-market trading, or maybe it was after hours trading yesterday, I did notice that the price did come down to $4 a share at one point, I think just over the course of a minute. So I think that was a great dip buying opportunity. If an order was able to get filled then, I think that's great. I think that what we're seeing right now, right around 420, 410, 433, whatever it is, I think that we are seeing discounted shares. I think that what's going on is basically how can we increase the maximum amount of infighting going on in the retail community before we see the next leg up. And so the way that market makers, whoever gets that, is by holding the price down, keeping it low so people lose faith. We dip lower. Then the low that we saw over here on the 17th, price came down to $4.32, testing that downtrend. We've gone lower than that. It's a lower low. It's bearish. The sentiment is getting terrible. And, I think that this is the time to be accumulating, the time to be buying. It could, however, come lower though. If we do notice this purple downtrend, price could be coming down to like $3, and 60, 70 cents, somewhere around there. And so, I do think that is something to be bracing for. But I think that it's unlikely that price will be coming down to $3 a share. And one reason for that is if we do look at, let's see, I'm just moving the cursor over to June 21st. So right here, where the cursor is, that is when the monthly options contracts expire in June, and that would correspond with a price, let's see, right around $3 a share. And so maybe price does come down to that level around then, but I feel like we're going to be seeing some bullish moves before then. So I feel pretty good about $3 being above $3 a share for AMC. And actually, over the past week, I did buy just one, but a call on AMC with a strike of $3 a share, an in-the-money call, because I think it's very likely that price will be well above $3 a share come the 21st. But if it does dip down to that level, I'd be happy exercising my contract. The premium was $190, so that's $1.90 times 100, 190. And so effectively, I'd be buying 100 shares at $4.90. That to me seems worth it, even though price is currently lower than that right now. I'd be happy to exercise those shares because I do think that we will be retesting, the 11s, the 12s, getting up into the 20s. And so, those are my thoughts on that. And, I did want to do one thing, taking a step back here. If we do notice this purple downtrend, it's kind of like based on this time frame that we've been existing in following this reverse split 1 for 10, following the APEs, the AMC preferred equity units. And, so I feel like we're kind of like in this different zone than if we were to look back in time at this other price action. And so in order to kind of get that onto a more comparable level, I'm going to switch over to the logarithmic scale. So right now the y-axis is linear and this Fibonacci is linear. And if you do notice, we are trading below the 786, so below $4.41.3. If I switch over to a log chart and I switch the Fibonacci retrace to be on the log scale, The picture looks a little bit different. It actually looks pretty good. But looking at it on the linear picture here, we are above this purple downtrend. So I do think that is really good. And I do think that we will be holding well above $3 a share over the course of the next month. But if we do dip below $4 a share, if we do dip below getting into 380 or so, testing $3, I think that things are looking really good. And so I'm going to I think that those are just dip buying opportunities. And so I am going to switch over to TradingView to look at the chart, but I also did want to pull up Max Pain for today, $4.50. We unfortunately closed below that today. So that doesn't look so good, but we only closed a little bit below it. I don't think it's really that bad. And so what I did want to pull up here is the Max Pain for June 21st. That is $4 a share. And so, like I had mentioned, I bought a call with a $3 strike for June 21st. I feel pretty confident that's going to close in the money, and I'd be happy to exercise that. If I do flip over to the options table before I get into TradingView, we can look at the options that expire June 21st. And so the in the money $3 strike for AMC, because price is currently above $3. It is currently in the money. And with Max Pain being well above $3 at $4 a share, I feel like it's pretty likely that this contract will close in the money. And so basically to buy this contract, the premium to get this call is $1.50 times 100 is $150. And so that is basically that would give you the option to buy 100 shares at a strike of $3 a share if it closes in the money on June 21st. And so I think that seems pretty likely. And if it does close in the money with the premium, that's like $300 per the 100 shares per contract to exercise them, and then adding on the $1.50 times 100, $150 premium, that's like buying 100 shares at a price of $4.50. And so the question is, where do we see price being a month from now? Do we think it's going to be above $4.50? Do we think it's going to be above $3 a share? I think so. And so I think that buying in the money calls with a strike of $3 is like a really good move right now. I only have one of those contracts. I might get another one, but I just think that seems like a really compelling way to trade AMC, whether that's to exercise the call if it does close in the money, or to just trade it for that premium, because I do think price could be going up to $12 a share again, and so then that contract would then be worth a lot more. So it could be a really nice way to make some money. But anyways, I'm going to get back over to the chart here, and we can see that I've got these lines drawn the exact same way that I did in Webull. Here, this is just in TradingView. And the reason why I wanted to do it in TradingView is because it's much easier to look at things on the logarithmic scale. And so I wanted to do that. And so one way to do that in TradingView, I do not pay for it. This is all free. You can just right click on the y-axis. And so I got a regular right here, or we can go to logarithmic. That's going to adjust the y-axis. That also adjusted the Fibonacci retracement. And so the reason for that is if I click on the retracement and I go to the settings here, the nut tool, or whatever that is, we can see if I scroll down, fib levels based on the log scale. I have that checked. And so if I do move this over and I check that, it adjusts them to how they were before, with us currently trading just below the 786. But I want to see with the Fibonacci levels based on the log scale in log space, because that's what we're looking at. And from that, it does look like we have not pulled back to the 786, which would correspond with a lot of support, given that we have these tops over here right around $3.35. Another reason why I feel like it's unlikely that price will be dipping below $3 a share, or at least closing on June 21st below $3 a share. So I feel like that's kind of a safe bet. In the money call options, I'm new to them, and I'm excited about them. But anyways, current price, we closed today at a price of $4.33. We are just above the 65% retracement, which between 65% and the 618, that is the golden pocket marked here by the yellow line. And so that 65% level is at $4.17. We are above that. We did wick below it today, I think offering discounted shares. And that golden pocket is being respected. And so I do think that we could be seeing the next leg up. And so one way to get an idea of where that next leg up could be, I'm going to do a Fibonacci extension going from the approximate low here and to the approximate high here. And then let's say just coming down to that yellow line, that golden pocket, we can get an idea of where price could be going to the upside. And so I'm just going to take a step back, and we can see here that actually I'm going to zoom in a little bit for this to start. Now we can see that the 100% extension will be getting to a price of like 1364. I think we could be getting to the 1618, which is at 1950. And that would correspond with a gap fill over here. So that makes a lot of sense to me. I could definitely see that happen. That's, seems pretty reasonable, getting up to $20 a share. But then if we also do look, there is this white downtrend. What is that? And so when looking at the AMC chart in log space, I've just connected these two pivot highs, one being the all-time high that was hit on June 2nd of 2021, and then also connecting that with this other pivot high, which was hit, let's see, on I believe August 8th of 2022. And so just connecting those 2 points in log space, we get this nice downtrend that has acted as resistance. We have not traded ever in the history of the stock above that level. And so maybe price could be getting to that level. And I suspect that would be acting as notable resistance, but that could correspond with maybe a gap fill over here. If we do break above that, maybe get a wick above, that could be bringing price to right around $44. I had talked about that before. That does represent the 4236 extension from this Fibonacci that I did. I'm just going to zoom in on the chart so we can see that a little better. And yeah, so I just feel like what we're seeing right now, while in log space, we are below this purple downtrend. We are respecting the golden pocket. We are in there. I think it is dip buying zone. And I think that by the end of June, we're going to be testing $12 a share again, maybe getting higher than that. I suspect testing 20, maybe getting up to this white downtrend, which would be right around $32. Maybe breaking higher than that. So anyways, I'm just really excited about AMC. I'm excited about GameStop. I'm also excited about NEO. I'm just really excited about the position that a lot of these stocks are in right now. And so if you're feeling frustrated about the current price of AMC, that is because people, Wall Street, they are trying to drive you out of your position, trying to get you to lose faith. There are a lot of trolls out there right now. Have faith, have conviction. This big up move that we saw is just the beginning. GameStop earnings are coming up, and I think that is going to be bullish for GameStop. And I think that we're also going to see a lot of bullish stuff going on with AMC as well. So, I'm just really excited about AMC, and I hope you guys are too. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.